Yeah.
Not enough. All right.
People say that about us.
Yeah.
Yes. I
All
take it as a compliment.
Yeah.
All right. I am Marci Caputo with New Construction Market Experts.
Erin Smiley, new construction market expert.
And
And drum roll.
we're excited to have Larry Wisher here with us.
Whoop
Yep.
whoop.
Our
Thank you for having me. Yeah.
fantastic lender from
Union Home Mortgage. Yep. Yep.
All right. Well,
So this is the big thing is you have folks that most people have to finance their home. And it can be pretty scary. Just the thought of it. But it's not. And I love to tell people, please help yourself. Just reach out and start the conversation. You don't bite.
Right. Yeah.
What does that look like? When somebody calls, they're like, well, you know what, we've been renting. We're thinking, you know what, rent is insane. And I keep seeing all these ads. Maybe it's better that I look
Or-
into an attached home.
or maybe they've called a real estate agent and they said you need to be pre-approved first, which is really the ideal way to start looking for a home. So, at what point?
Well, they didn't call anybody. They called us. Because
Yeah.
That's who you call.
Exactly. Yeah. No,
Yeah.
there are so many different variations on how we get a prospective buyer, right, over to us. And so most times it's from a real estate agent such as yourselves, right? So we'll come in, and because as you mentioned, I mean, there are cash buyers out there, and if they're, if it's cash, they don't need me, right? However, the majority they're going to need financing. And so, really what I do when my first conversation with them, I call it my initial consult, right? I'm just going to learn about kind of their goals and objectives and what they would like, right? So I usually start with kind of the property type, right? Because I like to get, buyers excited about homeownership. And so I'll start with like the property type.
Mhm.
Is it a house, townhouse, condo, manufactured home, that type of deal? And then I listen, and then I'll find out, all right, great. So if you're going to purchase a home, do you have any like down payment funds set aside or earmarked or access to, right? Well, I've got about $10,000, but I think my dad might help me. Great. I jot that down. And then I want to learn about monthly payment budget. No different than you're going to go out and look for a place to rent. We all
Mhm.
have a budget, right? And if it's a individual or if it's a couple that's making the decision, a lot of times they haven't had that conversation, but they've seen that house online. Oh my God, I love that, right? But until somebody like myself actually can put the numbers down based on goals and objectives, right? Then you won't really know, right?
Yeah.
Mhm.
So I go through, and it's just ingrained in my brain on how I do this consult, right? And so once I learn all that, then really what I do, then I can start kind of putting down, okay, based on a house where you have 10,000 to put down, you say your monthly payment budget's about 2,000 a month. That includes everything. So we know that's going to be principal and interest, property taxes, insurance, mortgage insurance. Hopefully no HOAs if it's a single family residence, but if it's in a PUD, like, a lot of the whole, was back in the day, um, we have to factor that all into that 2,000 a month budget. And then we will work backwards into identifying a maximum loan amount. So we call that our base loan amount.
Mhm.
And then after the 10,000 gives us the purchase price. And we know closing costs, right? So that's your appraisal, title, escrow, underwriter, recording. I call that the villagers or the vendors, right? They all are required to complete a home loan today, and they all need to get paid, right? So they all charge their own fees,
Mhm.
and then we have a proration of property taxes and
Yep.
homeowners insurance. That's all part of that down payment. So I have to factor all that into that 10,000 a month, right? So as we know, I mean, on a price point, if the house is going to be say 400,000, which we know is harder to do, right? Property taxes could be 3,000 a year. I can quickly go, okay, closing costs are going to be about 4,000 on that, plus 3,000, plus 1,000 for insurance. We're close to 9 to 10,000 in closing costs. That's going to eat up the majority.
That down payment.
hmm So then what we can do is we can either say, okay, for the right house, if we can't ask that credit or the seller for a credit to pay for those, then we need to make sure that we've got 10,000 set aside to cover that, and then we're probably going to have to do like a down payment assistance program to do
Mhm.
that. But so that's kind of a higher level overview of the conversations. And I just had this with another agent this morning asking me, hey, Larry, I'm meeting with this first time buyer. What do I need to ask? I said, well, first of all, you're not the lender expert, right? But I said, start with the property
Not
type.
my lane.
Yeah, exactly. I said, start with the property type, get them excited about it, and then get us connected.
Yeah.
Because I'm going to ask the exact same questions like I just did,
Yeah.
right? And then, my job is I never push. All I'm doing is just simply educating.
Yeah.
And if and when all of a sudden I didn't get to the credit yet, right? We didn't talk eligibility. I just want to kind of get a sense of, okay, are we working with reality? Because look, honestly, if they say, hey, my monthly payment budget is $1,500 a month, it's going to be really tough, right? So, but, not saying that's not out there. I mean, we've helped some clients up in some other parts of, Longview and Kelso that actually worked out okay. But that requires a lot more down payment, right? So really, it's like you mentioned earlier, it could be that scary first step, but there's no cost or obligation to do any of this, right? And then we hear a lot, well, gosh. So when I know that I've got, at least they're paying attention and they're ready to take that next step to see what pre-approval or
Mm.
eligibility looks like, then I'm kind of asking about credit. Hey, do you have credit? Well, I don't know. I'm not real sure. It's like, okay, great. We will help you with that.
Yeah.
And then once we have the opportunity to pull the credit, so we'll have them complete the loan application.
Hmm.
We'll ask for all their financial documentation. We'll pull the credit, and then we're dotting I's, crossing T's, and then we're going to start checking boxes for eligibility. We're going to start asking the questions, and I prep them that, hey, the agents, you guys hit all the fun stuff with them. Oh my God, I love this house. You get to celebrate with them. I'm going to inconvenience you a little bit, but we
What?
work really.
Crushing dreams and
Exactly, yeah, yeah.
aspirations, as I like to
Yeah.
say.
But we work really hard to make sure we provide that world-class experience, just like we would want to be treated. We're consumers at the end of the day,
Yeah.
right? We've been doing this a long time, so we feel like we have a really good mousetrap, but we can always get better. So anyway, so we try to put that, prospective buyer at ease. And we kind of have a lot of fun with it too. I mean, there's going to be some, fun banter. Like I just had one right now, this young first time buyer, and he's texting me and he goes, hey, I got to eat my lunch first, then I'm going to get you over your documentation. I go, yeah, make sure. I don't want you sending me documentation when you're hungry.
Yeah.
Yeah.
Nobody wants a
Well,
hangry
I just have a quick
application.
question. You
Yeah.
talked about credit, and
Yeah.
credit I feel like is one of the scary factors for
Yeah.
everybody. So, it's either they don't know what their credit is, which is
Mhm.
quite often, or it's like, oh, if they check my credit, then it's going to take my credit score down. I mean, I
Yeah.
know it's simple, but can you just speak to that for
Yeah.
a second?
Yeah. So credit scoring really for mortgages, so we can go all the way down to a 500 score now, which is pretty insane. We have not seen
Wow.
that since pre 2008 when we had the financial
Wow.
crisis. Yeah. So
Wow.
We don't talk about that.
yeah, I know, but it's so long ago.
Yeah.
So anyway, no, but and then we have scores as high as like mid 800s, right? So, but yes, the piece about the credit, there is a misnomer out there. If Larry checks your credit, but you haven't had that credit checked in like months, it's not going to have an adverse impact on the credit score. The things that really adversely impact credit scores, delinquencies, defaults, collections, so that's the those are the big ones, right? So like when I review a credit report, if I see that their score is like 580, first thing I do, I look at it. I'm like, okay, what can we do to remedy this, to
Hmm.
resolve this in order to get that score back up?
Yep.
Make no mistake, we can help borrowers with very low credit scores, but there's a caveat. The caveat is more money down and or
Higher rate.
higher rates and
Yep.
terms. Yeah, yeah. But we can come up with a strategy where we have the ability through our credit reporting platform to be able to say, all right, if I want to get them from a 580 to 680, what do we do? And it puts it through a finder, and then it tells them, okay, you need to do these things.
And that's a big deal
Yeah,
because it could be one of those things that maybe my intention is that I'm not buying a house in the next 2 months, but next year I'm going to work on credit. I'm going
yeah,
to work with work history. That's another thing
yeah,
where, you're going to want to see some consistent work history. You can work on these things. So you are a better financial applicant for that loan. And
absolutely.
and that's why I really try to encourage people, even if you're just thinking, just have that
Exactly.
conversation,
Yeah, yeah.
please.
Because again, you won't know till you try,
Yeah.
right?
Hmm.
And it's worth it to go through the exercise. It is not, it's pretty painless,
Yeah.
you know. Um, but once you do, then we can come up with strategy on, all right, if you're not ready today, not a big deal. Here's your path.
This is what I'm going to
Yep,
Hmm.
yep,
recommend
yep,
for this to get you ready.
yep.
And 6 to 12 months
Exactly.
that you can focus on
Yeah.
this.
And then we keep them we have a semi database. We nurture it. So we check in monthly with them to see how they're doing. A lot of times they check in with us. Hey, Larry, I just got that credit card paid off. Awesome. So, but it's neat because we can do these rescores. So
Hmm.
we don't have to wait for a billing cycle, 30 plus days to do that. We can go, okay, you just need to provide a statement that shows you paid it off. And then we submit that and then we can get the rescore.
Oh,
Okay.
wow.
Yep.
So once they're past that
Yep.
and they're like, okay, credit's
Yep.
looking good.
Yep, yep. So their credit's looking good. Then we'll come back and say, based on your down payment and your monthly payment objective, your price point range is in here. And they're like, great. And then we let you guys know as agents, you guys have the green light. We share with you what that price range looks like. We also will, be specific. Hey, we could really use a credit from the seller to help pay for those closing costs and prorations. So we'll advise that. But now they have the green light to go find properties.
So tell me about loan programs, because with your first time home buyers, you're going to have specific programs or down payment
Hmm.
assistance. You're going to have options. And that's where it's really important that you have a lender that you can trust that's going to be able to tell you these different programs
Yep.
versus going to perhaps a national
On your phone.
mortgage
On your phone.
lender who is going to put you in a call center and spit something out.
Yeah, right. It
But we're
rhymes.
not bitter.
Yeah, it rhymes with socket. But anyway, so
We're going to cut all that out.
yeah,
We didn't say that.
yeah,
Especially what she said.
yeah.
Mm-mm.
Sprocket. Yeah.
Yeah.
Anyway, yeah. So no, I mean, local presence is, I believe, critical. No different than your guys'
Yeah.
lane as a realtor. I mean, it just look. Most buyers, as we know, may find the property first because of technology, whatever platform they like to use. But then at the end of the day, it's like, all right, so like we're big fans of our clients being able to, when they're pre-approved, to send us properties.
Mm-hmm.
So we'll run numbers on properties prior to them making offers, right? Unless it's a fire drill, even on weekends, my team and I work, so we'll still get them numbers. But if it's a scenario where, look, we've got you up to 400,000, this thing is 300,000, but you need that letter right now, Larry, we don't need to see the numbers. We already know our payment's going to be lower. We were good with the payment objective at 400, then we'll just send it off. But yeah, but having that, obviously the local presence is critically important because, I mean, as you know how I work, it's like whenever an offer is submitted, I call the listing agent and try to help lobby the offer.
Yeah.
Really connect the dots and go, hey, we're going to be in this together. We all want the same thing. Closing on time for me is not a value add, but it's being able to create an experience for all parties involved, to really get to A to Z.
That's big
Yeah.
for us. I mean,
That
working as a team because we
Yeah.
all got to work
Oh,
together. I want a win-win for everybody in
Yeah.
the party.
yeah.
So,
and to manage the stress level.
Yeah, yeah. Well, and that's what we get from buyers, right? I mean, they're stressed. And so I tell my team every day, we do this every day. Our clients do not. And when you sense a little like if there's too much back and forth in email, so they know if it keeps going back and forth at 3 times, you have to pick up the phone.
Yeah.
Because you just, I mean, you
right.
just can't do that. That drives me crazy, the back and forth email.
Mm-hmm.
Yeah.
Yeah, it's inefficient.
Clear
Yeah.
it up a little bit.
Yeah.
So, okay. So now, they've found a home. They made an offer. It was accepted. Now what's happening behind the scenes
Yeah.
in your world?
Yeah, exactly. So then we get the contract. So we have a close date. And so then I talk to the borrower. Everything's updated. We send them one more. We have one sheet that we like to send. It's real clean. It details everything. It'll be specific to the offer, so they know what their payment is, what their rate is, what their cash to close is,
Mm-hmm.
and then they're like, "Great, we lock that and we go." Right.
Okay.
But then from there, so picture like that file going down that conveyor belt. Right. So then what happens is now it goes from me to my team, and my team gets that into the loan manufacturing or processing portion of the equation. And so basically, where it's going is it's getting submitted to our underwriting department. So we kind of talked about that earlier. The person behind the curtain, Wizard of
Wizard
Oz.
of Oz.
Yeah,
Yeah, I
yeah.
like it.
And but really, the underwriter has the credentials that we don't have, and so they're just stamping they're validating what we already pre-approved them at.
Yep.
And like I said, we've been doing this a long time, and the majority of approvals are automated, meaning it goes through an automated system. It's not the old school of just the underwriter going, okay, line item by line item. We only do that if we can't get the automated approval, and then we're going to have to switch gears and go to what we call a manual underwrite, which is great. We do. A lot of lenders won't do it. If you don't fit the box on the automation, automated approval, you will not. They'll
You're
just move on.
done.
Yeah, we'll look at it and go, okay, so you're not fitting this because maybe your credit score is too low, debt ratio is a little too high. So therefore, here's what we need to do to kind of fit in the
Get
box.
you
And
there.
because look, home ownership, right? It sounds cliche, but it's still the American dream, and it changed. I grew up in North Portland. My parents are not wealthy. I'm going there after this, by the way, to go visit them.
Hi,
But
Mom, Dad.
yeah, but I mean, I bought my first house. I just finished up Fred Meyer, put myself through college, and I bought that first house in 1993, and it changed my life. So we're really sensitive that we want to really help homeowners, borrowers become homeowners, because we know, the average net worth of a homeowner is about 40 times higher than those that are not homeowners. So that part's, kind of getting off the little track here with the manual underwrite. But now once that goes to the underwriter, within 24 hours, the underwriter comes back, stamps it, goes, "Yep, I agree with your pre-approval." There might be a few more items because they're really going in depth. Like, okay, wait a minute, we saw an inquiry, meaning the credit was pulled from Capital One Bank. Did you open an account?
Mm-hmm.
We see it a lot with, oh, hey, we can tell somebody just bought a car because we can see, all the different inquiries from the different
Mm-hmm.
auto financing. So we just have to get letters of explanation. Most times it's already showing up on the credit report, which is great. And then people, when they ask about debt, a lot of them don't know this, but we're not so much concerned about the total amount of the debt owed. We're more concerned about the minimum monthly payments per
Payment.
month, because that's what is factored into the debt to income ratio. The total debt is not. So a lot of times, like, well, I'm going to wait and pay off that. I go, don't pay that off. I go, how much do you have to work with? Well, I only have 10 grand. Well, how much is that card? Well, it's 2,000. Well, okay, that eats into our down payment. So I'm like, let me do my part first, because chances are you'll be able to leave that $2,000 debt outstanding. And we want to make sure we preserve the 10,000 for our down payment.
Mm-hmm.
Right.
Yeah, that's
Yeah.
interesting.
So then once it goes into underwriting, they stamp it. And then really at that point, we're waiting for you guys to let us know that, hey, we're past inspections. You can order the appraisal. We order that appraisal. We usually get that back in a week. Really, our goal is to have the appraisal be the last item. So we work really hard to get through all the borrower conditions first. And borrowers, and I prep them. Hey, we're going to go on a journey here, right? Just like we did in the pre-approval. The journey's getting better. It's getting easier. But just when the team asks for something, just, be quick on it, respond, that type of deal. And of course, we do the do's and don'ts. Don't go buy a new car. Don't go run up your credit cards.
Furniture.
Yep. Don't go on vacation during our close date.
That
Yep.
I mean,
Yeah.
just
never happens.
never.
Never. So here's a question for you. So, let's say you are, and this has never ever happened to me before, where usually we like to advise folks, stay with your lender
hmm
when you initially go under contract, but there are some folks that will start shopping around
Yep. Yep.
because and correct me if I'm wrong, it used to be that you went through underwriting at the beginning, but now it's the beginning and end, correct?
Yeah. I mean, for years, it's always been just, hey, we'll pre-approve you, run it through the automated system. You're good,
Mm-hmm.
right? But it doesn't go to underwriting yet because there's not a property identified. So we call that a TBD underwrite, which we can do. Um, but a lot of lenders just don't do it because everything just checks out so well. There
Yeah.
is an easy approval. How's that?
Yeah.
Yeah. But
Well,
so
what does shopping around mean to you? I mean, because you hear that all the time. Well, I'm
yeah,
going to shop. This guy's giving me a better
yep,
fill in the blank. So
yeah.
what?
So everybody is after what?
The lowest rate.
Okay. So, but with the lowest rate comes a
Mortgage payment and a loan application
And some fees,
and some
probably.
fees
cost.
and
A cost. So the interest rate and the cost to get a rate are directly related. And I will tell you, 33 plus years of doing lending, all lenders are operating within about a 0.25% range. There is no magic rate out there. If there is, you have to look to see, because they're charging what we call discount points, right?
Mhm.
So like what we do is we always give two options. We give an option of where they pay no discount points for a rate of X based on their profile. And then we'll show them if they want to pay 1% of the loan amount, then the rate's going to be lower at X based on their profile. And so, but yes, the shopping, my advice is, if you're going to do that, do it before you get in contract, right? And they don't
Yes.
always listen, right?
Yes,
And
please. But we
do
tell them
that
that. Yes.
yeah, it
before
just
you get under
yeah.
contract.
And I, like in Oregon, you have to write an addendum if you switch lenders. And I
Mm-hmm.
think
And in
Washington, yeah,
Washington
maybe
as
that's
well.
what I
Mm-hmm.
thought. Yeah. So, which really helps us because, look, they don't pay us a fee. We don't get paid until the transaction
Yeah.
closes, right? Much like
Mm-hmm.
you guys. But it's just, you're going to get those borrowers, but I can kind of learn early on. And if it's just, if they don't, if I feel like, I haven't done my part to earn that trust for that borrower, and I mean, and I like I have scripts and I know how to do that, but you're just going to get some consumers that just, and those are ones I just won't work with. And
Mm-hmm.
it just, I don't need to,
Yeah.
right?
Yeah.
So, that's the very small percentile,
Yeah.
but it's really tough if they're going to shop after they're in contract because we probably gave the pre-approval letter on a Sunday. We took time
Right.
away from our family to
Mm-hmm.
do that. It's just bad business. And so
Right.
Agreed.
that's why I
And
make it very clear up front. Hey, we're committed to you, but we need you committed to us. We're going to work evenings and weekends for you. And just as long as we have that understanding, right? And
right. We
so,
try to push that as
Oh,
well because
yeah,
I know that's really important. You
it's
want somebody you can
horrible.
it is.
trust.
It
Yeah.
It
just, yeah,
and you're like, if the train is going to go off the tracks, it's because you've made these
yep,
changes uh 3 weeks before close date
exactly.
and didn't let anybody know.
Yeah,
Not
Yeah.
good.
yeah,
Yeah.
yeah. And
So
we talk about, partnerships, right? Because I mean, we're all we're partnering together to do what? To benefit you as the client,
Mm-hmm.
right? So, I mean, so it's just, and that's where it's important to kind of really connect the dots. And like I said, closing on time is not a value add. The value add is, all right, providing this amazing experience, everybody keeping, their sanity, right? And they know next steps and we over communicate. I mean, if any, I've never been accused of not over communicating, but we do a lot, right? And so, and that's what we want as consumers.
Yeah.
I
Well,
mm-hmm.
mean,
and that's what I tell buyers. I said the folks that have a tough time at their close date are the ones that are on autopilot and wondering about where their Christmas tree is going instead of making sure they have all the appropriate paperwork, that everything's been scheduled and completed, and we are ready to go.
yeah, and I've got a scenario where I just was sent a proposal last night because I'm not doing the loan for the buyer, but she's purchasing this property in contract. Their close date's like in 2 weeks, but she's already asked her realtor twice about questions on the loan estimate. And I go, well, that's a question for her lender. Well, her lender is out of Texas, and they're buying in Oregon. I'm like, well, how did that happen? And I thought maybe the buyer was from Texas originally.
Mm-hmm.
That's not the case. So she's really struggling. This buyer is struggling to communicate with her lender, her loan officer.
Yep.
And the loan officer doesn't know all the prorations and everything in the state of Oregon.
Yeah.
So or title fee, she's asking the realtor. And I'm like,
Yeah.
And
Again,
I'm
not
not
our
going to
lane.
tell
Yeah.
you that. I
yeah,
am
yeah.
not a licensed lender.
No, and
No.
I just said, look. So of course this agent's sharing with me, and I said, what do you want me to do? I mean,
Yeah.
and just so she's like, well, I just more so. So then I talked to the realtor this morning and she goes, hey, I think the buyer is in a good spot now. That's fine. I go, I'm not going to, my job's not to take a deal from
Yeah.
another lender. I won't do that. But if the borrower wants to talk to me, then I'm happy to.
Yeah.
Mm-hmm.
So,
Yeah.
Yeah.
Be a resource, which is
Yeah.
absolutely. Absolutely. Yeah. Yeah.
important.
Yeah.
But
Yeah.
yeah,
So again,
trying to.
communication, really having a good understanding as to what is happening with your loan, what the process is, keeping an eye on things, and supplying paperwork.
Yep.
We all have had those where, you've called
Yeah.
saying, all right, still waiting for that
Yeah.
information.
Yeah. It's like, hey, where's page 7 of your retirement account? Even though it says 7 of 7, you gave me 6 of 7, but the last page is left blank intentionally, right?
Yeah.
We still need that page.
Which
Wow.
Yeah.
is so crazy.
Look at that.
But yeah.
Yeah.
Yeah. But I'll touch on, if we have time, I'll touch on kind of how technology is helping us though in that
Yeah,
in that
please.
Well,
landscape.
and I
Yeah.
was, when you were talking about that, because in theory, your underwriters are working business hours, with you having this automated portion of
hmm
it, it's got to, you know, really help give you more time to make sure that everything is
A-
tight and
Absolutely.
ready to go.
So how are
Absolutely.
you using AI?
Yeah, so it's pretty cool. So AI, one aspect is what we call a document analyzer. It will it'll analyze a purchase contract and it is looking for keywords, and
What
so
are they?
Yeah. Anything that could kind of create a red flag,
Hmm.
right? So really on the contract, we're not going to see it. But the other cool one is appraisal reports. So appraisal reports can be 50 pages long. It is looking for keywords that are red flags, such as dry rot, right? Mold. I mean, these are just so, and it literally pulls it all out, right? And so also bank statements, right? So now we do programs for self-employed borrowers such as yourselves, not saying you're in this category, that may not show much income on tax returns because of general accepted accounting principles. But anyway, so we actually can qualify borrowers using bank statements and their deposits.
Hmm.
So we've always had that, but that went away kind of during COVID. Now it's back. And so the cool part about it is now we take those bank statements, we simply upload it in a link, and then AI goes through and just reviews everything.
And gives you a number.
It can pull out some certain, components, but then it gives us the average over a 12 or 24 month, depending on, so like that. Whereas before, it was a human looking at it going, okay, I got to look at all the deposits and, right.
Yeah.
Yeah, so we have purchase contract analyzer, we have bank statements, we have the appraisal report, and there's other stuff that are we're slowly kind of implementing into that. But the one big one that just rolled out for our company is where it's only for conventional loans. But what's really cool is it once somebody, if they're just a wage earner, if they're self-employed, it doesn't work as well because we still need to analyze those tax returns, which the analyzer can do, but it's not able to determine the full qualifying income just yet, especially with multiple entities. But if it's like, hey, the guy works at Nike and she's over at Intel, whatever, when we have all the documents in our what we call our origination system, we hit a button, it gets analyzed within about 6 minutes. It spits out the qualifying income and the approval.
Wow.
And so we call that at minimum standards. And then once that's done, the underwriter, again, the underwriter still needs to validate, he or she cannot change that income. And they won't change the approval. So now what we're doing is we're going back to our referral partners, and I'm glad we're here today. So we know the standard closes 30 days.
Hmm.
We're now going back, hey, look, if you want to go do a 21 day close to win the deal, because we know it's getting competitive, if you want to do a 14-day close, our appraisal, so because of TRID, the most we can do is about a 14 days is the shortest because you have the 10 business days deal. But if I get a property inspection waiver and through that on a conventional loan, I can close that thing in 14 days.
Wow, that's amazing.
So we just had one where there's competition, and I said, "Hey," and we already preempted it, so we will know going in if we get a property inspection waiver or not on a conventional loan, even before they make the offer. And if we get that, then we can definitely.
Wow.
That's huge. So we've changed our whole approach to pre-approval, and also remember I mentioned TBD approvals,
Yeah.
right? Meaning it
Mhm.
goes in the underwriter, but the underwriter now it's improving their efficiencies. I mean, by 40% now, but it's only for conventional. FHA's coming, VA's coming, but and that's where we just got introduced to this back last week. It's a game changer for us. So
Wow.
a lot of lenders aren't doing it yet, but it's just going to really just streamline the landscape of lending.
I mean,
Wow.
everything's so evolving in this industry that it's not
Yeah,
surprising to see that. And
yeah,
Yeah.
yeah.
yeah. So, but for those that are still kind of doing the normal outside of the AI stuff, the transaction, on average, we're probably around 22 days right now.
Hmm.
And so we play the waiting
Wow,
game on, hey,
22
you guys
days.
want to you want to close early? I have two of them
Love
right
that.
now. Close dates on Monday. We're like, documents are escrow today. I'm like, hey,
We
don't they?
love that's
Mm.
I know.
Look at that.
music
I
to
know.
our
Don't they
ears.
want to move in
Oh,
this weekend?
yeah,
Though?
Yeah.
But
exactly.
what we're finding, it's the sellers that need the time
Yeah.
to move out.
Yeah.
So yeah.
So what, we're obviously working with some new construction and
Mhm.
things like that. When it comes to, oftentimes somebody's like, I want to buy, they can't find what they want out in
Yep.
the market. So they say, okay, I'm going to build my own home.
Hmm. Yeah.
Tell us from what does that process look like? Because it's always a little bit more in depth than I think people are
Yeah.
expecting.
If it's a first-time home buyer, I would advise against it just because if they've never done it before or they don't have the down payment. So we do land loans, so we can go out if we can't get the seller to agree to, pay a deposit and then give us time to get your plan specs, architect, all that stuff, permits, all that to start building. We can do a land loan. Those usually are about 35 to 40% down. It's a 30-year amortization, and there's no prepayment penalty, so it's just there. A lot of the banks want to, they're about the same on down payment, but they want it paid off within 2 to 3 years.
Mm.
So just kind of pros and cons. But so once we have the land and it's in the borrower's name, and then they can go through they identify a builder, and then they have to start going through that build process, right? So as you guys know, it's the design, the engineering, plan, scope of work, all that stuff. We have a whole packet because we do the construction loans, um, and then but it's a more of an arduous process just because it takes longer.
Yeah.
Yeah, but it's we do a bunch of them.
Can you
Yeah.
is there a program to buy land and sit on it? Because I think
Yeah.
sometimes people want to do that and then,
Yep,
but
yep. So
Yeah.
so like I said, our land loans are just 30-year amortization, and
okay, but
there's
30 to 40% down, you said?
yep, yep. There's no balloon,
Okay.
so it's not due.
Oh,
Okay.
Yeah,
okay. Well,
yeah,
that's good to know.
That
yeah,
is,
For that.
yeah.
yep.
We had someone that was a little taken aback that they had to supply their tax returns.
Hmm.
That's something that is required.
Yes.
What are other options, or what are other things that you're going to need in order to process that loan? So you don't think, what's Larry doing?
Yeah.
He's getting a little too
Yeah.
close.
Exactly. Yeah.
What are those items? And it's not just Larry that's going to be doing this,
Yeah.
but
Yeah.
this is just what folks are going to require in order to, because you're going to be wanting a fair amount of money to buy this home.
Yep.
We're not just going to go, you seem like a
In
nice
order for
person,
Larry to give you
Larry.
that big bag of
Yeah.
money, you're
That
going to need
big
to hand him
bag,
a lot of
yeah. I mean,
documents.
Now
small and traceable bills.
we did do a lot of that prior to 08, I will tell you.
Shh, we don't talk about that.
Yeah.
I told you we don't
Yeah.
talk about
Yeah.
that.
Yeah.
But what kind of documentation are you going to be
Absolutely.
required?
Yeah. So look, if they're just a wage earner and they have no other properties or any other source of income, then we'll just ask for W-2s and pay stubs. We don't need the tax returns. But if they own other properties, real estate, if they're self-employed, if they're on fixed income, then we'll look for the tax returns. But pay stubs, W-2s, bank statements, and everything has to be all pages of the statements.
How
Even the
many
blank one?
years of bank statements?
Just 2 months.
2 months.
Yep. Yep. And then retirement accounts, because you have to meet what we call a reserve requirement, which means that it's just if you have no other properties, the guidelines state that you just have to have at least 2 months of the proposed monthly payment in a liquid asset account. So that
Got
could
it.
be bank account, savings account, 401k, IRA, that type of deal.
Okay.
Yeah, yeah. Obviously, identification, really important, right? If they're a non-resident alien, we need to see, the proper credentials, the paper, the visa,
Visa,
that type of
yeah.
stuff. And then really, that's kind of it for the financial kind of packet. But if there's a scenario where, again, we see inquiries on the credit report, but yet we can't, tie it to a debt, then we need to find out what is that
What
about.
happened?
Yeah, yeah. And so if they just open a new credit card because they're offering a cash, zero for 12 months or 0%. So we'll just ask, hey, we need to see the statement on that. But outside of that, it's kind of our boilerplate.
That doesn't
bread and
sound
butter.
I'm
scary.
just going to say it doesn't sound that
No.
That
scary at
doesn't
all.
sound very scary at all. Tell me about work history.
Yeah, work history. So we have to go back 2 years.
Okay.
Yep. And if there are any gaps, conventional's okay with gaps. When we start doing FHA loans, they're a little more stringent on gaps.
Can you stay within the industry if in that 2 years? Or
Doesn't
you need
have
to be
to
with
be.
the same company?
Doesn't have to be. No.
Oh,
No.
you just have to have work history.
Work
but you
history.
could have changed positions.
Correct.
Or
Yep.
jobs.
Absolutely. Yeah. So you could say, hey, I worked at Fred Meyer for 18 months, but now I just switched over and I'm working over at
Hooters?
Is that still around?
I don't know.
I think it's Waddles.
I was
right?
going to say Kohl's. She
Yeah,
goes
I
with
think
Hooters.
it's Waddles. It's on
Yeah.
your island,
Yeah,
right?
exactly.
Yeah.
Not anymore.
Yeah.
I wish.
Yeah, but you can go to Starbucks, right?
Yeah.
So
Mhm.
it's fine. And
Okay.
yeah,
So it doesn't have to be with the same company. It just has to be that you're working so you can
Yeah.
pay your mortgage.
or
Yes.
if you were a student,
Mhm.
then that's okay. That can count towards it, right? So we'll see some of that. I think one thing that's really worth noting, though, how people are paid. So we know hourly or salary, real simple, black and white. That's how it is.
Yeah.
But I get a bonus, or I get monthly commissions, or I get restricted stock. So that gets a little trickier when I need to use the bonus commission or we call RSU to qualify. And so what we always ask for is, so that gets a little trickier because then they're looking at, like somebody in my position, we get a small little base because of the state minimum requires, but we're primarily all commission, just like you guys, right? So if you go from, if I don't have a 2-year
You
history,
do this to make money?
yeah, exactly. If I don't have, 2 years of, earning commissions in the mortgage industry, right? Pretty tough to qualify me,
Yeah.
right? But if I go from, Union Home Mortgage over to say like Chase Bank or whatever, then that's okay. But they're going to want to see a little bit of, okay, the move you just made to Chase, was it a good financial move? And are you going to sustain your commissions? But we see it a lot in the tech industry
Mm-hmm.
because, tech is just like this. And so some years they do great, others they don't. And so we always ask for the final year pay stub because we get ahead of it because it breaks out, right? A W-2 does not break out multiple sources of income. So we try to get ahead of it. Then we have to get a verification of employment form. And then we look at if they're still with the same company, we look like year to date. So what's it look like through April? So we can really get a good picture of what revenue streams we can actually use to qualify. If I don't have to use the commission bonus or RSU to qualify, then we just go off the base and we're done.
Mm-hmm.
So, but that gets
Because they're
tricky.
all that easy.
Yeah.
Said no one ever.
Yeah.
But you find out borrowers, so they start, why do you, come on, I make whatever. And if there's declining income by more than 20%, it's a red flag. And now we have to really document that.
Gotcha.
Yeah.
Because we had a lovely gentleman that was buying a home, and he would get a big quarterly bonus,
Mhm.
and we had to wait until that actually hit his account in
Yeah.
order, and so we had to push his close date a week because we had to wait to get that document.
Yeah. Yeah.
Yeah.
Yeah. And the other thing that really kind of can make financing challenging or the qualifying income is when you have a borrower that has multiple entities. So I just had one. He bought a really nice property up on Bainbridge and put a bunch of money down. But I gave him the option. I said, hey, we could either go the full route of full analyzing tax returns, all your entities, all that. And I saw his list and I said, we're going to go down a path, or we can do it under this program. The rate's going to be a little higher, but we're not going to have to introduce any of that. And he goes, no, Larry, I want this one for the low rate. I'm like, great. So
Of course he did.
yeah. And we
And
go
then
down.
10 years of your life was lost.
Yeah. And it got kind of dicey in the end because the problem is he had 2 other entities that were bleeding money on paper. And so I'm asking him, I'm like, hey, so what's going on with these entities? You're showing losses, and he's like, oh yeah. I go, well, you really need to shut those down because it's having an adverse impact on what we're trying to do. And he goes, Larry, I've been trying to do that for last year. I just haven't got around to it. I go, well,
You haven't got around to it.
Yeah.
Well,
and I said, it's creating a problem right now.
does he need a personal assistant? I
Yeah,
feel like
yeah,
I need to
yeah,
step in.
Yeah. So in the end, though, we got through it.
Larry made it happen.
Yeah,
Larry made it
and
happen.
look, he gave me some pushback, and he said, Larry, at the end, I said, Craig, we had the conversation early on this date. I want to say I warned you, but I just said we're going to go down.
I advised you.
Yeah.
That's the word we use,
Yeah.
advise.
And he goes, in the end, you got it done. And I really appreciate the communication. So we got it done, because he's like, well, crud, I'm just going to go, he had some some good assets. He's just like, I'll just go pay cash. But he goes, I'm going to pay a massive tax implication. I go, well, we're not doing that. I go, just have your CPA send me this, and we got it done. Yeah.
I love that. I love the
Yeah.
creativity
Yeah.
that can happen
Yeah.
too. It's not always so straight.
Yeah.
It's rarely so straight.
It's,
in
Yeah.
it's
there.
rarely,
Yeah.
rarely.
Well, it's interesting because when we asked for his tax returns, guess what? He only sent us like the first 3 pages. And we're like, okay.
Right.
And that's
Yeah.
what we
So
do a lot.
again, the theme, what we're taking,
Yeah.
our little tiny nugget
Yeah.
of really good information is all the pages.
Yeah, all the pages.
Yeah.
You think it's simple, all the pages.
What we actually like is the email connection with their CPA and us. So the CPA will never send us the tax returns on its own. But if the borrower says, "Hey, Mr. or Mrs. CPA, will you please? I give the okay for you to provide my tax
Get the
returns." Oh my gosh.
information, then you're like, yeah.
Because we'll say, "Hey, we need this for all schedules and all, business returns."
They know.
Oh, they know.
I would love that too because then
Yeah.
you don't have to
Yeah.
Oh no, as a bar, yeah,
Figure out how to
absolutely.
get it to
Here.
you.
Yeah.
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 Showcase.
Yeah.
Exactly. No, I'm with you.
Mhm.
Yeah.
We'll remove you out of that.
Yeah.
They're gonna see it all anyway, so you might as
Yes.
well just get it out there.
Yes. Yes.
Well, thank you so much. This has been
No,
really
This has been
helpful. I think
great.
that
Thank
Yeah.
you.
Yeah.
yeah,
And it wasn't scary.
it wasn't.
No. Let's get some buyers.
All
Come
right,
on.
let's do
Yeah,
it.
I love
All
it.
right.
Yeah.
So you've gotten a bird's eye view of what this looks like. It's not scary to take that first step and just really kind of getting that education so you can move forward with the best loan program and the best lender is really it's just a necessary step to take, and it's not that scary.
And if somebody wants to find Larry and his amazing team,
Yes, exactly.
Where do
they
we find
you?
Larry?
Well,
Where's Larry?
yeah. Well, you can Google my name, Larry Wisher. But yeah, Union Home Mortgage. Yeah. So you'll definitely be able to find me. Yeah.
And you're based in Portland, but you
Yeah.
also work in Washington.
Yep. Like
Yep.
9, 10 states on the West Coast. Well, Texas, Florida. Yeah.
Oh,
So,
all
yeah.
right. You're
And
everywhere.
really right now, just my last point is, rates are temporarily elevated right now because of the whole, Iran crisis. Right?
What?
Yeah. So before that, we saw probably the lowest rates in about 3 years. So the fundamentals are there. It'll get back down, but that means this is not a reason not to be an active buyer, because if you can qualify and you can handle the payment for the home you want, check that box. We'll always be able to improve that interest rate, meaning lower it, and the payment when that day comes, and it
Yeah.
will come.
Yep.
It will come. Yeah.
Yep.
So
That's
Peaks and
good
valleys.
to
peaks and
remember.
valleys. Yeah.
All right.
Yeah.
Thank you.
All right.
Thank you.
Thanks, guys.